In this video, we're covering the remaining fundamental events in February 2026 that will move markets: the U.S. jobs report, inflation data, central bank decisions, PMI readings, and their impact on USD forex pairs, gold, silver, and the US 30 index. What's left this month? Despite the early week of the 2nd of February 5 already being released, several and high-impact events are still ahead this month, according to the Forex Factory calendar and macro schedules. The 11th of February, the U.S. non-farm payrolls, jobs report. The 13th of February, the U.S. Consumer Price Index, CPI, other mid-February data, 50 PMI revisions, unemployment, regional PMI, and sentiment data. These are the biggest fundamental drivers left this month, so our focus shifts to these releases. U.S. jobs report CPI. The 11th of February, the U.S. employment situation for January was delayed from early February due to a government spending issue, but is now scheduled for the 11th of February. This report releases the headline jobs number, unemployment rate, and wage growth, the most market-moving labor data of the month. Why it matters: strong jobs, stronger USD, higher expected interest rates; weak jobs, weaker USD, higher chance of rate cuts. This report will likely be the single most impactful data release all month for Forex and equities. U.S. inflation, CPI, the 13th of February. Just 2 days later, on the 13th of February, the U.S. Consumer Price Index, CPI for January, is scheduled. CPI shows how fast goods and services are rising, and inflation readings have a direct influence on Federal Reserve expectations. Market implications: higher than expected inflation, USD strengthens, yields rise, gold and silver; lower than expected inflation, USD weakens. Supports gold, silver, and equities, why both jobs and inflation matter together. The Fed uses both to gauge whether interest rates should stay high or be cut, so markets react strongly when either surprises. PMI updates of Fendis sentiment data. After the first week's manufacturing and services PMI releases already happened, markets will continue watching revisions and regional sentiment indices throughout February. These include ISM services and PMI updates, consumer sentiment indices, regional Fed MFG surveys. These help maintain the short-term macro narrative, leading into the jobs and inflation readings. USD fundamental outlook this month: bullish USD. If jobs grow strongly, wage growth surprises higher, inflation remains stubborn, bearish USD. If jobs disappoint, inflation slows more than expected, sentiment weakens. If both inflation and jobs are softer, markets price higher probability of Fed rate cuts, putting downward pressure on the dollar. Fundamental outlook for Forex pairs. Euro-USD. If US jobs and inflation surprise to the downside, the euro typically strengthens against the dollar as rate expectations diverge. Conversely, stronger US data can reinforce USD strength, pressuring Euro-USD bias. This month, Saudi bullish, Euro-USD on weaker US data, neutral. Otherwise, USDD, JPY. This pair responds strongly to interest rate differentials between the Fed and Bank of Japan. If the Fed stays more hawkish relative to Japan, USD trend, JPY, often rises. Bias this month, neutral to bullish USD JPB GBPOS. The Bank of England's policy path relative to the Fed's timeline matters here. If US data weakens and the bow remains steady, GBPUSD can gain. Strong US data often strengthens the dollar. Bias this month. This month, neutral FENCHI odd USD. Odd often reacts to commodity demand and global growth expectations. Weaker US data tends to weaken USD and lift odd, while global risk sentiment fuels gains. Bias this month. FNT bullish. If USD softens. Gold and silver. Mid-month fundamentals. FIT gold. Gold often rallies when USD weakens. Real yields fall. Inflation is sticky. If CPI softens and yields drop, gold has strong upside. If inflation surprises hot, gold may temporarily pull back. Bias, Phony bullish if inflation surprises soft. Silver tends to amplify gold moves due to its industrial component. This means if risk sentiment improves and USD weakens, silver often gains more than gold. Bias. Bastine bullish, but more volatile. US 30, Dow Jones Fundamental Outlook. US 30 reflects the US stock market's largest companies. Like other equities, it often benefits from easier monetary condition, so weak jobs or lower inflation can support a rally. Strong data can tighten financial conditions and weigh on equities. Bias. Bullish to neutral depending on data surprises. What to watch this month? The 11th of February, US jobs report. The 13th of February, CPI, inflation, PMI revisions, and sentiment data throughout February. Central bank policy signals later in the month. Key takeaway: this month is driven by employment and inflation data, and how the markets adjust expectations for interest rates based on these readings. The fundamentals for February hinge on how US macro data actually comes in versus expectations. Jobs and inflation are the core drivers. A softer macro environment puts pressure on the USD and boosts gold, silver, and stocks, while stronger data can flip the narrative. Stay tuned to the 11th of February and the 13th of February. These will likely drive the biggest moves this month. So to wrap it up, the rest of this month is all about US jobs and inflation. These two data points will decide whether the US dollar strengthens or weakens, and that will ripple through forex pairs, gold, silver, and the US 30. If inflation and employment come in softer than expected, markets will continue pricing in easier monetary policy. That scenario generally supports gold, silver, and equities, while putting pressure on the dollar. But if the data surprises to the upside, expect higher volatility, a stronger dollar, and more caution across risk assets. As always, don't trade the headlines, trade the reaction. If this breakdown helped you understand the fundamentals, like the video, subscribe for monthly analysis, and I'll see you in the next one.